Okay, and the third announcement, if anybody at any point has a question to ask, please feel free to click the Q&A button at the very bottom on your screen, and just ask the question anytime. Our experts can address your questions during the Q&A session. And last but not least, as I mentioned, this is the second of the 4 webinar series. I will also paste the registration link to the third and the fourth webinar in the chat box. So if you are keen to sign up, please go ahead and feel free to sign up. All the webinars that we are having in this series are complimentary. So now, without further ado, let me pass the time now to Shirley from PwC.
Thank you so much, Megan, for the warm welcome, and a big hello to everyone joining us today. My name is Shirley Mondianti, and I'm a Senior Manager with PwC's Risk and Regulatory Consulting team. Over the past years, I have been designing an industry-wide central SME lending platform together with multiple financial institutions like those in the panel here. And so as your moderator today, I am really excited to be facilitating this dialogue, especially with our industry veterans here. As some of you may know, as Megan has shared, this is the first of our 4 accelerated financing webinar was held last month, and we talked about really how the SME community's personal joys and woes when it comes to obtaining financing, and how they wish to be supported by the lenders themselves. So in this particular webinar, the second of which, we are stepping into the shoes of an alternative lender, a non-bank financial institution, as well as a bank, to get the lender's perspective when it comes to how they make credit decisions, to lend or not to lend. Our first panelist is Ms. Sarika Singh from American Express. So in her role as Director for the Small and Medium Enterprise segment, Sarika is responsible for acquiring and cross-selling in this particular segment. These encompasses solutions for working capital, B2B expense management, and travel and entertainment spends. Sarika oversees the portfolio, developing and executing on customer acquisition and growth and retention strategies, and brings with her 19 years of experience in people leadership, business development, and portfolio and product management within the payments industry in both Singapore and India. Our next panelist is Mr. Kenneth Koh from SG Cash. As the Chief Operating Officer and Managing Director, Kenneth oversees the day-to-day operations of the business and assists the Chief Executive Officer in developing business strategies for SG Cash. Since joining SG Cash in 2015, Kenneth has been instrumental in assessing all credit cases as well as managing the end-to-end loan process to grant loans to various small and medium enterprises in Singapore. Under his leadership, SG Cash has managed to provide financing solutions to more than 200 businesses in Singapore with more than $20 million worth of loans disbursed. And finally, we have our panelist, Ms. Teresa Ta from Standard Chartered Bank. Teresa is the General Manager and Head of Business Banking for the bank. She brings with her more than 25 years of experience in business strategy, product and credit positions within the SME banking sector across Standard Chartered Bank, United Overseas Bank, as well as Hong Kong and Shanghai Banking Corporation. So now that we are all introduced, let's dive into the first question of the day, right? So in Singapore, I think we recently started opening up quite a bit, especially with the steady climb in vaccination rates. But it's still tough to say that the pandemic is truly over. And so during this crisis climate that we are in, certain industries such as maritime, travel, F&B are really comparatively more affected than others. So the first question is really, how can SMEs increase their chances for securing a lending facility if they are in one of these affected industry? And let me start off with Teresa, your thoughts please on this.
Hi, thanks Shirley. Hi everybody. As you can see, I'm working from home. This whole COVID pandemic crisis has not just impacted most businesses, it's also changed the way we live and the way we work. Okay, so it's a very interesting question, and I think we do appreciate that many SMEs, in this sector, in this crisis, right, has been impacted quite severely, some more than others. I think where possible, like our RMs, right, our business development managers will actually conduct additional assessments on these sectors that are what we call hard hit. And, we will try to determine how we can actually, get them across the line in terms of getting funding, okay? For example, we could be extending a small loan quantum to start with, or we could be requesting for some collateral, etc. But having said that, I think we are still supporting these sectors. There are always, winners and losers in every industry, right? So, and we will always look, for opportunities. We'll assess each and every case independently, and we will work with the clients to establish and how best we can support them. And also, just another point to note is that if you have an existing relationship with a bank, and especially if you have already established some facilities in the past before crisis, right, that will certainly help a lot, because your track record with the bank, is very important. And, I can speak for my bank, is that, we will always try to extend support to our existing customers in the best possible way.
Yeah. Thanks for that, Teresa. I think it's a very interesting point, and I'd love to turn the table to Kenneth, right, which is on the other side of the spectrum. As an alternative lender, do you have similar or different viewpoints from what Teresa has shared when it comes to the question of how SMEs can actually increase their chances on securing, some of these lending facilities when they are affected, and any real examples that you can share?
Thank you very much, Teresa. Thank you, Shirley, as well. Good afternoon, everyone. Thank you for attending this webinar this afternoon. So I also agree with Teresa, on what she had shared earlier. So in SG Cash, right, I guess another factor that we take into consideration is having a good payment or credit history of the directors of the company. All right. If the directors have a strong personal credit bureau upgrade, it also signifies a higher probability of paying off the loan, and also a lower possibility of a default. So in this is the additional factor to it. And the next thing will be the transparency of the information provided. Okay, many of times, I mean, SME owners, some of them are not willing to share certain information about their business, but some of them are willing to share and provide accurate and up-to-date information, such as their financial statements, their corporate bank statements, or even other supporting documents as and when we request, right? So that if they are able to provide the information that that we have requested, it will be able to let us do a sound credit assessment of the loan application. Okay, for this, COVID-19 pandemic, for SG Cash, we actually came out with this COVID-19 pandemic package with, much reduced interest rate to help a lot of SMEs in Singapore. All right, and also we did approve a number of F&B clients as well. Okay, if you're not, for us, in terms of repayment options, we do have a flexibility whereby you can choose to pay on a daily basis, weekly basis, bi-weekly or monthly basis. So for those impacted sectors such as F&B, so currently 75% of our F&B clients are on a daily payment basis. Why is this so? According to the feedback that we get from these F&B clients, they felt that by paying on a daily basis, because they collect cash on a daily basis, it's easier for them to pay on the daily basis than to pay on the monthly basis per se. So because sometimes it's very tough for them to fork out a huge installment on the monthly basis. Yeah, that's for my SG Cash.
Yeah, that's very helpful. And I think kind of you touched upon the point about the fast-paced F&B industry and how, maybe daily repayments actually make sense. So as a credit provider, a credit card provider, I'm sure, Sarika, you probably see this trend too, especially amongst your customers. What would Amex want to say in terms of, these businesses that are affected in the industry? Will securing a facility with Amex be difficult?
Absolutely. I agree with Teresa and Kenneth on some of the views that they've already shared. Everyone's has had it tough in the current environment, and more so the small business owners. If I can just take a step back and look at how we have traversed the whole of last year, and we continue to do so. Small business owners have had to take extraordinary risks and make big sacrifices just to keep their business running during these unprecedented times. Many have put their assets on the line, made salary sacrifices, and continued working round the clock, showing that they have what it takes to keep their passion alive. Small businesses, it's a known fact, they are the engine room of the economy. And it's vital that all of us as lenders and financial institutions come together to support them. I'd like to share a few examples of how American Express is backing businesses to recover and grow despite the challenges and uncertainty of today. During the pandemic, and we continue to do so, we support our customers with a corporate financial relief program. We brought a very, very exciting offer to support over 2,000 small local businesses a few months back, which is called Shop Small. And by way of that, we funded the largest offer ever and supported these local businesses. I understand that, irrespective of industry, small and medium enterprises are on the hunt for financial support to push ahead with their goals and to drive growth and innovation. At American Express, the way we evaluate and look at small businesses and the unique underwriting that we have, to assess whether we can or what credit can we extend to a small business, industry is a very, very small portion of it. It's insignificant for us. We believe that with a strong personal credit score, small business owners can successfully apply for the small business card that we have. And for that matter, we also provide credit lines to startups, to new businesses. So there is a lot of flexibility. There is a lot of agility in the way we are looking at how we underwrite and small businesses to be able to offer these facilities. So in summary, while industry may play a part, it's a very, very small portion of the overall underwriting methodology that we have for the small business card. And we believe that a strong business fundamental and a personal credit score is all that is needed by small businesses to avail of these facilities.
Thanks so much, Sarika. I realized that, there are a few nuances, of course, as you guys represent all the different types of lenders. But one common theme I realized that all of you touch upon is the number one concept of lending, right, which is creditworthiness. But I guess beyond talking about creditworthiness, which I consider more of a foundational sort of measure when it comes to lending, what would you say you look for, right? Any alternative data points that are important to us that you like to share that we may not already know here as a SME? Maybe Kenneth, you'd like to start us?
Yeah, so maybe I think the first point I can share is the SME's competitive advantage and positioning. Right, so SME's competitive advantage and positioning is very important. If a SME has a competitive advantage over others in the same industry, all right, or offers superior services relative to competitors and is able to sustain them in the near future, they invest in R&D and they have plans to upgrade themselves and improve, it increases their chance of getting a lending facility. Maybe I share a real life example in SG Cash. So recently we do have this SME, all right, they are in the retail business. All right, and during this COVID-19, retail is also one of the impacted industry as well. So they do have a number of physical stores in Singapore, and in order to survive during this pandemic, they have to do live stream and constantly update their company's social media platforms and engage influencers to promote their products. So they are able to tap on the current trend and also the tailor the business needs to based on the current environment and the climate, and also hence this client because of he has the certain foresight, and whether they are able to tap into the existing trends and leverage the strength, it will be a deciding factor for us as well. Yeah. So secondly, I guess is the integrity of the SME owner. Some of you might not have already know in SG Cash we conduct 100% site visit for all loan applications. Okay, so during this pandemic period, so we do virtual Zoom site visit, as well. So there was a case whereby this customer was very willing to share about her recent litigation case. okay, and how she manages, to get over it and the lesson learned. I believe that probably the banks or the financial institutions, when they look at the personal history and there's this litigation, they might not be comfortable in granting a loan to them. But for us, she did a very thorough explanation, and about why is it that there's a litigation record, in her history, and then it also provides a background for us to actually have a holistic, assessment of this case. In the end, what she told us and actually matches our, internal assessment, and her loan was approved. Yeah. So number 3, I guess I shared about personal history. I think this is very important as well. If a SME owners has a previous litigation or bankruptcy record, I think they need to be very upfront and to explain clearly why is it so, this and that. And the other thing we take note is how long have this business been around in this in Singapore, or how long have been the directors been in the business. So these are also additional data points that we look at, all right, before we grant a loan. Yeah.
Kenneth, that's really an interesting insight, right? And it's very relevant as well, based on your example on how you actually leverage on, some of the social media, some things that your clients are looking at. I'm curious to therefore hear, from more of a traditional bank perspective, right, Teresa? Are the alternative data points that, maybe Kenneth looked into are also similar, or do you see that as completely not the same at all in your context?
Yeah, thanks, Shirley. I would say that it's broadly similar. Okay, I think the fundamental of lending, it exists everywhere. Of course, we look at, years in business. We look at the experience of the key promoters. That's important. We look at the sales turnover trend. Is it going up? Is it going down? And of course, we validate it, with financial statements, or it could be bank statements or GST statements. And then for bank statements, we will be looking at all the receipts and all the outflows. What is the monthly cash balances? And also, are there any, negative behavior like, check returns, etc. So these are actually very important to establish, the good track record, like I mentioned earlier. And of course, all what Kenneth had mentioned, all the whether there's any negative adverse news, information, litigation, which will not bode very well. The credit bureau track record of the key promoter is also very important, because we believe that the payment behavior of the key promoter is very strongly correlated with the company's payment behavior, especially for SMEs and the smaller businesses. Yeah. So I guess and also where do you operate? Is it rented? Is it a mortgage premises, or are you operating from your own home? So these are the additional data points that we look at.
Yeah, that's very helpful. I think what both of you shared do help to shed light on what SMEs can potentially try to work on beyond just, say, the usual sort of standard kind of measures that we're looking at. So on the flip side, I also want to hear, right, what are perhaps some of the pitfalls that you see as we start looking at more of the SME applications that you're getting, when it comes to credit facilities, lending facilities, what are some of the pitfalls, and what do you recommend for them to take note of? I'd love to invite Sarika to weigh in on this, especially since Sarika, you probably go through a number of applications daily as a credit card provider.
Yeah, thanks, Shirley. And a lot of similarities, that we're hearing from Teresa as well as Kenneth. As a lender, what do we want? We want to gauge the ability of a small and medium enterprise to pay us back. And what is the best measure to do that is looking at your credit score, right? Everyone here has spoken about credit score. So before applying for a facility, it's a good idea to get a copy of that report and to make sure that there aren't any errors or any other issues that may hurt your chances. I'd advise small business owners to apply for a lending facility or a borrowing facility, or a loan when they really need it, and look at facilities that are designed to cater to the specific borrowing needs of your own business. If you do that, it's likely to yield a better result. For example, what do you need? Do you need a short-term working capital, or are you looking for a long-term credit facility? So these are some very, very basic things that perhaps the SMEs should be looking at, when they apply for a credit facility. Finally, ensuring a good and consistent repayment. Teresa spoke about it as well. While this may seem very logical and it's like a given, borrowers have the tendency to miss the payment timelines, often for no other reason but due to lack of preparation. There could be last minute tech hiccups. There could be issues in transferring of limits, etc., or restrictions there that they have to deal with their banks. And all of these can cause delays and negatively impact credit score, which is the most important yardstick of how we are assessing your credit worthiness. In addition, what could you do more of? Share as much as you can, with the lender on any other positives that are coming even in the future. For example, what are your plans in the next 3 to 6 months, or maybe even a year? Do you see you won some contracts which could add to your revenue and make your business more sustainable, etc., even though you may not be at that position right now? So all of these will build on the positivity of your application and ensure that you get the credit line that you are looking for. Thanks, Shirley.
Thanks, Erika. One thing that resonated with me is really when you mentioned the piece about missing repayments, right? Because I think, Enterprise Singapore has also did a little survey as well when they looked at, all the SMEs in Singapore, and they noticed that about 60% actually can't repay their lenders because the SME customers don't pay them. And then it causes that snowball effect that therefore also impacts the credit score ultimately, right? I know, Kenneth, you have a close relationship with those that you lend to, as part of the work that you did. Like you mentioned site visits earlier, you mentioned about, reviewing some of the social media and their record and all that, and try to get to know their character, right? What mistakes do you see the SMEs sort of make when they, are doing this process, and any practical recommendations or examples that you can share?
I think it's one very important is to be honest. I mean, integrity is very important. So maybe before I talk about site visit, I can talk about more about when they submit, the records, the supporting documents. Some of the times that we do receive documents that they manipulate the data. All right, and then it leaves a very bad impression on the SME per se. Yeah, so sometimes they will tend to window dress their financial reports, and which but from our internal assessment, we are able to check that it is different from what actually it is. So I mean, when it comes to submission of documents, I think it's very important that I would advise SMEs to ensure that the documents submitted are updated and accurate. All right, keep proper records and not to mix personal transactions in the corporate statements. We realize that there are a couple of transactions that they mix around. They say that okay, they have personal stuff inside within this corporate bank statements, and also do not manipulate the financial data. In terms of the site visit that we conducted, I guess when we pose certain queries or questions to the applicants, all right. They were not able to answer our queries, and they keep saying that they will come back to us. But at the end of the day, we did not hear from them again. Yeah. So I mean, and another thing is they are reluctant to share about their business, their environment, how their current business, how did COVID-19 impacted their business. Some of them, they find it not willing to share. So if you're not willing to share all this to us, it's very tough for us to assess, your application. So in SGCash, I guess that you have to be truthful, all right? You will be honest, and then be genuine, sincere, and transparent during our interviews, and clarify any doubts as soon as we may have. So I guess this will be a better position for you to get your loan approved. Yeah.
Okay, that's great. I think both of you really touch on really good points here. And the one thing that I noticed, especially as a common theme, is also this concept of, making sure that you're honest, you're upfront, that you're giving more information that you can and being transparent about that, right? That's something that I noticed both of you have shared. I know we've covered quite a bit of grounds when it comes to some of these questions, and I'm going to be a bit cheeky with my next question here and put all of the three of you actually into a little friendly competition, right? As I alluded to at the beginning, each of you represent a slightly different type of lender, right? A bank, a non-bank financial institution, an alternative lender. What is your feel when it comes to your competitive edge over the others? And, what should SMEs take note of when they are seeking to apply for a facility from you? Let's go around starting with maybe Amex and then SG Cash and round up with SCB.
Absolutely. And thanks for that question, Shirley. Though you've already classified American Express as a non-bank FI, we like to call ourselves an alternative lender. And that's how I'd like to approach this question. So at American Express, we don't compete with traditional lending products. Our solutions for small and medium enterprises, including the small business card, complement the overall borrowing strategy of a business. One of the things that we do really well is leverage the power of data as well as machine learning to understand what does the customer need. All of this, along with new ways of credit assessment using data, allow alternate lenders like American Express to plug the gap and help small and medium enterprises that may have fallen through the cracks get the financing they need. If I quote from our product and solutions that we have for SMEs, businesses don't need to be profitable, to avail of a credit facility from us. Similarly, they can be as young as 6 months or even new. So we have a solution for every business who would like to apply for a small business card. We don't ask for complex and lengthy documentation of past records or even collaterals. We don't assess small and medium enterprises that way. There is very little friction, and the approval process that we have internally is very, very quick. So it's pretty seamless. You apply for the small business card, and within a few days, at best, 3 or 4 days, you have your approval, if all goes well. Now, with the growth of e-payments and where we find ourselves today, specifically, with COVID thrusting this age of very rapid digitization on everyone, and look at Singapore, right? There are e-payments everywhere. The business credit card here then becomes a tool that is almost essential in enabling these payments. Also, due to the nature of the product that we have, we are able to invest in offering rich incentives, when the card is being used. So this gives, say, a three-way win for the small business owner. Firstly, the use of the small business credit card as a short-term interest-free working capital. Secondly, a non-personal credit facility that enables e-payments. And lastly, a payment tool that will give you rewards, and rich incentives when you use it. So with the powerful backing to keep the small and medium enterprises moving forward, American Express is here to help get your business done. That's what I'd like to say about this.
Thank you so much, Sarika. And SG Cash, you want to go next?
Yep. Hi, for SG Cash, right, we do have a very short turnover time. So from the day of approval, from the day we receive the full documents from our client to the credit assessment, interviews, and loan approval, on average, it's about 3 business days. All right. So if you're looking for a loan, you're looking to take up a loan from us, and you can expect this short turnover period. All right. And number 2, you are able to customize your loan as well. So a lot of SMEs, they tend to, choose their loan package based on their business needs. For instance, all right, we have offered loans for duration for 1 month, 45 days, 2 weeks, okay, and some of them prefer to pay the interest in the beginning and also the principal at the end of the loan tenure. All right. So at SG Cash, we try to match our client needs as far as possible. Thirdly, we have our flexible loan repayment. You can choose to pay monthly, weekly, bi-weekly, or daily. So there are a lot of options for you to choose from, depends on your business needs. And also for those SMEs who did not get your loan approved from the banks, don't be disheartened. You can apply through us. We will look into your individual applications on a case by case basis. All right, and a word of advice for new borrowers: integrity plays a significant part in the loan application process in SG Cash. So it would be good for SMEs to be upfront, honest with their commitments, the nature of the business, the current business environment and position, and the chances of approving will be much higher. Yeah. All right. That's about for SG Cash. Yeah. Thank you.
Thank you. And Teresa, do you want to jump in to kind of round up what is the competitive edge when it comes to SCB?
Yeah, sure. I think traditionally, right, banks and finance companies have dominated, the area of SME lending. That is no longer the case, with the emergence of alternate lenders. Then again, some competition is always good. It keeps us on our toes. And also the fact that the emergence of these alternative lenders, right, is proof that there's a segment of SMEs out there, okay, that are actually today underserved. So, and I think to compete more effectively, of course, we have, as a bank, we are very tightly regulated. At the same time, we are trying to leverage all the new technologies out there, okay, the machine learning, AI, to kind of try to digitize as much of our process as possible. We have started this journey. We have created a digital onboarding journey for small business lending in the form of unsecured term loans. And that was launched last year. And that is actually enable us to grant credit facilities fairly quickly and in a shorter time of less than 3 days. So, and of course, we also have provide other products like trade facilities, working capital, and to cater to different client needs. That requires more, I would say, more credit assessment, understanding the customer's working capital cycle, and we will have a relationship manager actually managing these accounts very closely with the clients, and to ensure that we deepen the relationship and understand the business, and we support the client through the whole business life cycle. And I think the other competitive advantage is that our pricing tends to be lower than those of the alternative lenders. I think because banks have the ability to access lower cost of funding. So these will be the key ones. The fact that we are able to provide RMs, we are already digitizing our onboarding, credit origination platform, and pricing.
Thank you so much for the honest sharing, right? I think all of your insights are very helpful for the audience members here as they consider the kind of different types of lenders. What's the difference between all of you? Whether they're prioritizing, say, the speed, the turnaround, the product itself, and what is therefore suitable for them in their next borrowing. Just one last question last two questions that I have. I want to pivot towards more on the topic of technology as we start talking about, things like the speed in which people, the companies turn around. A lot of it has to do with the kind of technology that's also underpinning the support in which you are getting from a credit decisioning perspective as well as a lender. So I wanted to ask this question, how have your organization specifically have used artificial intelligence as well as data analytics in your credit decision making? So maybe I'll want to get Teresa for you to elaborate a bit more because you highlighted the piece about your digital lending platform as well.
Right. Okay. Yeah. So as I mentioned earlier, we have actually automated some parts of our credit assessment process to enable our teams to kind of focus on the client needs, right? And we have the tool to be able to read the documents and convert them to structured data, and then some algorithm to populate all the ratios and so on and so forth. So I do not want to say that we are AI enabled because this term is kind of means different things to different people. But what we do have is that we actually use like expert models, right, which is a combination of like a credit scoring engine, and also combining it with some human evaluation to kind of derive the final decision on loan approvals. So, and the other thing that we also do is, to harness the use of data, which will enable us to understand the needs of our clients, and also to see if there's any gaps in terms of the provision of services, right? For example, some clients, depending on the industries that they come from, may have trade financing needs, right? and it could be, some businesses have very seasonal needs as well. So this actually enable my team to kind of better tailor proposition the most suitable propositions for our clients.
Thanks, Teresa. And I know, this is really relevant as well to, I would say, Sarika, right? Because I think earlier you also mentioned about the power of data and how Amex have sort of been turning into some of these technology advancements like machine learning in order to give that personalized touch to your customers. So, Sarika, would you want to elaborate more as well, how Amex have sort of used AI and data analytics in the credit decisioning process?
Absolutely. It's very, very relevant, specifically in today's age, right? I mean, we're seeing use of AI in various facets of the economy, the daily life, etc. So when I think about the underwriting of small businesses or businesses in general, as we look at it from American Express, there are three areas in which AI and machine learning add a tremendous amount of value for our customers. Number one is data and how we source, how we process our data. And we have made a number of investments in this space to automate the process, over the last several years. Second is data science. And this is where, our in-house risk experts come into play. We have a lot of AI to synthesize, basically to understand and to make meaningful inferences from the data that we collate about our customers. For instance, I can illustrate that with a simple example. We have data of past behaviors or say something as simple as repayment tracks with certain attributes or characteristics of customers. These could be with customers with a certain credit score range. These could be with customers of belonging to a certain industry. We brought up industry earlier. These could be also with how old or young the business is. Now, what we do is we use this inferences from this data and overlap it with the way customers in these industries and past behavior has gone on in terms of what sort of credit facility, for example, is the best to extend, or how and when would we expect, say, a repayment in that sense. So that's where data science really plays that important role. And all of this then culminates together into the third and the most important one, which is real-time decision making. Through the use of all of this data and the inferences that we have. We use a number of statistical models with latest algorithms, which are predictive in nature. So when I say predictive, it means that, we use the data and we then predict what is the behavior going to be, of a certain set of attributes or characteristics that we see in an application. Now, these models are the backbone of our credit decisioning at American Express. They drive all the key decisions that we take, like a new account onboarding, or even in the overall customer life cycle, customer management decisions at say point of sale authorizations. Say simple example, someone's going above the limit. Do we approve the transaction? So line management, responsible lending, actions related to fraud, etc. So I think AI plays a very, very important role in all facets of our business and customer lifecycle management. Broadly speaking, what we are trying to do is basis all of this data information that we have, we are trying to define a customer score based on the analysis of past borrowers' characteristics, and instead of using judgmental rules. So this approach, with the wealth of data that's available with us, it really helps in improving the accuracy of our credit decisions and makes lending more cost efficient across the customer life cycle.
I think it's interesting how, both Teresa as well as Sarika, both of you have mentioned, some of these innovative and creative ways in which you're handling data and trying to make sure this is, fitting for some of these more personalized way of understanding your customers, right? And so I'm curious as well to hear, when it comes to using some of these technology, because some of the ways in which it's being used are also go into quite a bit of depth in terms of understanding the customer, right? How do we ensure that therefore the technology that's being built is going to provide ethical and fair decisioning for the SMEs? So maybe we'll come to Teresa. You want to add in first?
Right. I think traditionally we use human beings, right, to approve credit, to make credit decisions and approve them. But that can come with a lot of biasness, right? Because everyone, if, for example, an individual doesn't like a particular industry, he or she is not inclined to approve anything. So I think it's important, therefore, that we start to automate a lot of this decisioning, right? And of course, leveraging on all this data, which is client, it can also be alternative data, which is very important, especially in the space of SMEs, where financial assessment may not be the best way. And and I think it is an evolution. Even as a bank, as traditional as we are, we've already started exploring the use of all these other alternative data sources. It could be, the transactional data that you see in e-commerce platforms or trade platforms. It could be payment data combining with, the traditional like credit bureau, which will actually help to give much better insights and make much better and more consistent credit decisions going forward.
That's interesting. And Sarika, anything else to add to that piece, especially when it comes to ethical and fair decision making, when you start leveraging on some of these models?
Absolutely. So I'd just like to make a couple of points there. Singapore's central bank and financial regulator, Monetary Authority of Singapore, already has a set of principles for the use of artificial intelligence and data and analytics. These are meant to promote fairness, ethics, transparency, and accountability. Now, these key principles and best practices for the use of artificial intelligence are intended to help financial institutions to strengthen their internal governance and also reduce the risk of data misuse, or even avoid situations where data is data actually leading to judgmental decisions, right? Or biases that even Teresa spoke of. At American Express, we abide by these principles, and there is a lot of internal periodic monitoring, stringent checks, etc. With our internal compliance teams. And in addition, we ensure that the models that we use for data analytics, they don't tend to systematically put any customer or any group of customers at a disadvantage, through the decisions made by the model. So there is enough and more testing and simulations that are run, before we actually finalize the principles of the usage of this data for a particular purpose in the overall credit decisioning process.
Yeah, I think that's really insightful as well, especially as we think about how Singapore is really trying to roll out the FEAT principles that you mentioned, Sarika. And I think on Teresa's point, really the piece about how it's really important to make sure that actually we automate more, right? So that there is really that reduce in the biases that humans might have. I want to now open up the floor to the audience's Q&A, because I see that we are brimming with quite a number of audience's questions here. And one of the questions that I noticed is really tackling more to do with like the amount of information that we're providing, right? So I think one of the question is, Kenneth, you mentioned that SG Cash goes the extra mile to investigate adverse news and find out more information. But then also at the same time, you're asking for transparency from the customers as well, right? To give you more information itself. And so I think the question is really, when does it stop? When do we stop giving some of these this request for documents? And is there any other action we can kind of stop the loop from the documents itself?
Actually, for us, I mean, when we investigate on this like litigation or bankruptcy proceedings, so if the customer is able to support our internal assessment, so I think that is whereby we will stop that investigation. I mean, there's no time limit, but of course for us in SG Cash we are quite straightforward. If the client if the client will be successful in his or her loan application, usually it will go to the next stage of the site visit. Yeah, if it doesn't go to the site visit stage, I mean, most likely your loan will not be approved, and we will let you know within the week of when we receive the loan applications, so that it will not delay your other applications probably somewhere else. Yeah, so I mean, when it comes to this kind of investigation, it will not be a prolonged period whereby we will ask you for you know, a lot of supporting documents as and when, you know, and it delay your application process. Yeah.
Yeah, I think on this note as well, right? You know, the follow up is, you know, in the case of SG Cash, there is that process in which, you know, to investigate further for some of these documents and information about the SME. So I think there's a question to therefore follow up on that for Sarika and Teresa. You know, how would Amex and SCB kind of handle such situations as well? Is it when it comes to SMEs that may have gotten in the news for certain being in a certain sector, or just being, you know, caught in certain involvements as well?
I mean, if I can just add to what Kenneth has said, right? I mean, we do have some basic documents that we request for to do our assessment. And it's only when we come across some areas that requires, you know, more investigation, like what he said, because of some negative information coming from credit bureau or coming from, you know, all the other government searches, then we will ask for additional information to kind of to mitigate for that concern. Okay, but of course, you know, if it's a very it is something that is not doable, we will stop asking for information. I mean, for additional information, you know, because it will lead to a decline. I mean, we ask for information because we want to help and support the application as much as possible. So that's why the transparency is very important, and the clients working with us to justify the loan application is very important.
I can add a little bit to that. So absolutely agree that, you know, and like I said, what we're looking at when we are lending is the client's ability to pay us back, right? There are several factors that we consider to determine that. Now, ability is one aspect of the repayment, but the other aspect is intent as well, right? Now, if we have information available in the public domain, which makes us think otherwise, then yes, you know, it's a watch out signal for us as well. However, like I said, you know, past perhaps if there have been situations in the past where because of say we are in the middle of the pandemic. So, I mean, look at the situation, right? There are businesses that are not doing well, etc. Now, do we, take that and use this as a yardstick to measure your business performance and give you a credit line? No, it is a dialogue, and it's an ongoing dialogue, whether it's a new customer that we are acquiring or during the customer life cycle as well. So, like I said, when I answered one of your previous questions, Shirley, if the customer is forthright in sharing information and which helps us take that decision, then we're all for it, right? So there is no one thing that is very important in it. For us, when we look at small business owners, the small business card looks at one of the most important yardsticks is the credit score. So yeah, if say your credit score is impacted, then perhaps that suppresses our ability to offer you a bigger line, etc. However, again, there is a range. So there are various things that we look at, and only one thing doesn't become so important into our decision of lending or not.
Yeah, one of the things that I'm also noticing, as you guys are speaking as well and looking at the questions that are coming in, is that people are also curious to hear about the credit decision-making process as well, right? So I'm seeing some questions about how, will the assessment be different if, say, a business is not an SME, if they don't have, say, local ownership, if, for example, they have a strong profile, but they are looking at both, alternative as well as the banks. So I maybe want to group some of these questions together, right? So when it comes to really the credit assessment process, will it impact, someone if they are not an SME, like say in Singapore? How is it going to be different from the kind of processes that you guys have been elaborating upon, this particular webinar. Maybe Teresa, do you want to share this piece? If for example, they are not a business in Singapore that is not an SME, how can the assessment be different?
When you say not SME, what, they are large corporates?
Yeah, it looks like it's based on the questions. It looks like they are a large
right.
corporate. Yeah.
Okay. Yeah, I guess the assessment really depends on the size of the loan requested and the complexity. I'll just take the point on if they are not SMEs first, and then the second point is they are not local. Okay, so for large corporates, right? I mean, it's really very discretionary in the way they do assessment. They'll be looking at the facility size and the quantum, and they'll be, obviously looking at all the various, supplier, buyers, and the terms of trade. And then, it's a full discretionary lending approach, okay? And then as you go down to SMEs, there are also different ways that we do credit assessment. And a lot of it has to be driven by whether we are taking collateral or not, okay? So if for example, it's fairly well secured by property, the assessment will be relatively straightforward, as opposed to a fully unsecured loan. Then the assessment tends to be skewed more towards discretionary lending, okay? Then of course, right now, in terms of automating our credit decisioning, that actually works more for the smaller loan quantum, small ticket size cases, like, the unsecured term loans. And going forward, we will also open this up to the smaller ticket trade facility that is very program driven. So I said that because there are, as long as the customer meet all the, rules and all the credit assessment criteria that's already agreed upfront, it's likely a yes, okay? So it really, like I said, it really depends. And we adopt different credit assessment approaches depending on the needs of the client and the size as well. Then if you're talking about foreign entities, it's a very different, I would say, very different discussion altogether. Because for foreign entities, right, usually the first hurdle that y'all have to cross is the whole AML KYC, we call client due diligence, right? Because we want to establish, do you have a Singapore presence? Who are your owners? And then you're basically trying to understand the whole structure. Where do you operate? Why do you need to set up the business? Or some of them don't even have a Singapore operations here, but they want to open an account, for example. So all these things needs to be cleared first from a client due diligence perspective. Then, of course, if you talk about, lending, you want to have a borrowing relationship, for StanChart, because we have a strong international footprint, okay, we actually leverage on our so-called global account management approach, where if the parent company is domiciled in another country and is banking with StanChart in that country, we can actually leverage on that relationship to lend in Singapore, just to give you an example. So that's how it's the assessment approach is, and the credit as well as the relationship management is done.
Thanks so much, Teresa, for that. I think it's interesting to hear, a different perspective, because I think we have mainly been talking in the local context, but really looking at more on the foreign context, what the consideration is, and then also on a bigger corporate perspective. I also have a question here, which is really talking about, maybe if I flip the coin and say, look at the micro, sort of SMEs and the smaller SMEs, right? Is there any lending limit for SMEs? Is there a loan that is too low, that is not worth the trouble? And I'm curious to hear, maybe Kenneth, if you want to weigh in on this particular question. Is there a loan that is too low that is not worth the trouble? Is there therefore alternatively a loan that is too high and does not fit, the lender's limit?
So currently our limit for our signature growth package, which is a normal term loan, is up to 300,000 Singapore dollars. All right, no matter whether you are a large SME or you are a small SME, the maximum will be $300,000. This you need to fulfill certain criteria, which means you need to have minimum 3 years of incorporation. But however, for those SMEs who are newly incorporated, 2 years ago, we actually launched this entrepreneur growth package, which targets all this new entrepreneur with incorporated less than 2 years. So we do have a maximum of $30,000, okay, for new entrepreneurs. But I'm not sure whether is it too low or too high for some of the SMEs, right? I mean, of course, for new entrepreneurs, I mean, we want to assist them at this point of time. And we, of course, if they are able to show us that they are continuing growing this and that, we will be able to offer a higher quantum for them. Yeah.
Yeah, I'm curious, Sarika, on your thoughts on this one as well. Like, do you think that there is such a thing as, too high or too low when it comes to lender limits?
No, there isn't actually. There is no lower limit. There is no upper limit to, the loans that we want to extend in the form that we can to SMEs. We have solutions ranging from, lower limits to higher limits across the spectrum of the stage of business that the SME may be in. There may be, and like I said, we are an alternate lender. So if you do already have, a facility from a bank, for example, but you feel that it does not suffice the limits that you need, absolutely, you could come for a lower limit to American Express. Alternately, if you feel, and that's the beauty of, the solutions that we have, the ease of use and the simplicity of the whole process is so amazing and works so well for both SMEs as well as large customers, that if you feel that there are reasons for which you need a higher limit from us, we can support that as well.
Sarika, I also noticed that there is a question that's specifically for yourself, so for Amex, right? And this is, I think, related to what you're just sharing as well. And the attendees mentioned that are business cards the best form of funding for businesses, given it's fairly short term with very high APR, and it does not encourage the SMEs to plan adequately for their future cash flow. Does Amex envisage sort of a provision of more SME funding capabilities, given some of the acquisitions that might go on?
Yeah, absolutely. So are business cards the best form of extending facilities for SMEs? I mean, we are a card company, right? So all that we do has a card at the back, whether it's a physical card or a plastic or it's a virtual card, right? So all our products and solutions are card-based. So I'd say, yeah, they are one of the best ways of funding businesses, and we've seen a lot of success, with customers taking on our solutions, and it goes on, and it is true for, like I said, the spectrum of the range where your business is today. It could be that a smaller SME may have a particular need, but as you grow, do we have the ability to keep supporting you with the larger lines, with different solutions, etc.? Absolutely. So we work with some of the largest companies as well on working capital requirements, and similarly we work with SMEs, and that's the focus of this discussion. So yes, business cards is an excellent form of getting this facility on for SMEs, and specifically it also allows you to use it very easily, in a lot of forms, whether online or even say offline, etc. So do we envisage the provision of more funding capabilities given our acquisition? And there are a number of acquisitions, right, of Cabbage, which is an alternate SME lenders in the US. Yes, absolutely. And we are on the lookout for partners like that, for businesses that we, where we see that there is a lot of synergy. We have business loans in several markets, and we do foresee that, these products and solutions take a little bit of time to, come across all of the markets. But yeah, in every market, we have different solutions that work for different SMEs, and there are more that keep coming. So absolutely.
Thanks, Sarika. That's really helpful insights. And I know that we are almost at the top of the hour, so I'm just gonna check one last audience question. And this last audience question is, I'll rephrase it a little bit so that, we can kind of close it up nicely, right? Which is the question on if an SME has strong enough credit profile to receive loans from both a bank as well as an alternative lender, what is the advantage, for both of them? And maybe I'll get both Teresa and Kenneth to share for this last piece, just to close up the rounds here. So Teresa, do you want to start us off?
Right. Come to the bank. Anyway, good question. I guess there's no perfect answer really, because our credit assessment could be slightly different. And I think both either SG Cash or or Stanchart or you're talking about banks and alternate lenders, right? I mean, we have our own set of criteria, which sometimes may not be met, but you could be able to qualify for a loan in alternative lenders. I mean, that could be the case, but I would say that the key advantage of coming to a bank is really, like I mentioned, is around pricing, and also because we have a much fuller suite of products and services to offer, and also because especially where we are doing trade and working capital facilities, right? That gives you a lot more flexibility. We actually assigned a relationship manager to support the client. So that would be the key reasons why you will come to a bank.
Thanks, Teresa. And Kenneth, your thoughts?
I guess for SG Cash, if you're looking for a flexible loan tenure, okay, you can come to SG Cash. As we do not as probably for the banks, you will require a certain tenure to get a loan. For SG Cash, it can be anytime from 2 weeks, 3 weeks, or for even up to a year, 2 years. So in addition, you do not have a record in your credit bureau. All right. If you borrowed from the bank, probably it will reflect in your credit bureau. So we do have some clients. They do not wish. I think probably they have certain reasons for doing that. Okay, they do not wish to have these records in the credit bureau, so they will come to us as well. All right. And I think finally, a loan customization. We will try to match to your business needs. Okay, we will try as much as possible if we can. Yeah. That's for SG Cash. Thank you very much.
Thank you, Kenneth and Teresa. So I know that we are at the top of an hour, and this has been a very jam-packed 1 hour where all of us got to learn about how all these 3 different lenders think, when it comes to really assessing creditworthiness, considering other data points, how they're using technology to ensure fair and ethical decision-making itself. So I'd like to thank our panelists for sharing all of these very, very helpful insights, as well as our attendees for attentively tuning in, giving us some of your questions, and finally SBF and RootAnt for organizing this session. So as I mentioned at the start, this is actually the second of 4 Accelerating Financing webinar series. So I look forward to seeing everyone in the next webinar, where we'll dive into more on the technology side of things, right? We'll talk about innovation in the credit marketplace and hear how the kinds of technology that we're using are actually evolving. So I'll pass the time now for Megan for any closing words on your side. Thank you.
Thank you, everyone. Just a quick one. We have a 3-question survey when you close the webinar. So if you can kindly provide us some feedback, that would be great. That's all from me. Have a good weekend, everybody. And may I ask Teresa, Sarika, and Kenneth, Shirley, if you can just hold, I forgot to take a picture for us. Shall we go ahead and do that? Everybody else, please feel free to sign up. I've pasted the link in the chat, and let me take a photo for our lovely panelists today. I'm going to blend into the background, okay? All right, well, you can still hear me. All right, get ready, your brightest smiles. Okay, 1, 2, 3. All right, thank you. Okay. So that brings us to the official end. I am going to end this webinar. Everybody have a very good weekend, and we will see you soon. Bye-bye.
Thank you. Bye-bye.